Hi everyone, welcome to the Market Antithesis, where we ignore all the noise and focus on what really drives the action on Wall Street. Today, backed by popular demand, we're going to talk about DIMO, the new decentralized data gathering project that's specifically focusing on gathering you and I's car data using crypto incentives. We're going to take a deeper dive into the white paper and see how many DIMO tokens you can earn if you join this project. But before that, I always want to remind you to download my free ebook located in the description of this video. This ebook gives you a simple way to generate income off blue chip safe stocks. I know over the past year, there's been a lot of talk on social media and online about meme stocks, AMC, GameStop, call option trading, short-term trading, kind of quasi gambling. All that stuff is meant to distract you. In this ebook, I'm going to talk about the simple way to own blue chip stocks and generate guaranteed income off them that you can either use to deploy into more stock or you can invest them into crypto projects like DIMO. So take a look below, it's 100% free. So we've come back to the DIMO white paper. Before we discuss the exact formula that they've laid out that will allow us to approximately calculate how much DIMO tokens you can earn by joining this project, I want to give an overview of the DAO, which is kind of going to be the infrastructure or process that these tokens are going to get distributed. So what is a DAO? Probably heard a little bit about it online if you're kind of following the crypto space. It's an acronym for a decentralized autonomous organization. So it's a version of the corporations that we all love and know, but it's going to be a decentralized and autonomous version of that kind of acts on its own and isn't beholden to one single CEO or a board of directors. It can be controlled by the entirety of members that are involved in the project. So DIMO outlines here what they think are going to be the main roles of the DAO that they're going to set up. Number one, and I think this is pretty important, is designing, deploying, and adjusting rewards pools for drivers and referral bonus programs. So it's pretty good that this is something that's going to be controlled in a decentralized way because you don't want one actor adjusting the rewards program and messing up all the different incentives of this project. I tend to like having a centralized structure behind things because if I trust them that they have the right incentives and that they're smart, it gives me more confidence in my investments. But I think for these type of projects, specifically to avoid any kind of antitrust legislation in the future or attacks, I know that's a lot of stuff that's kind of happening now with some of the big tech companies. These decentralized organizations are unlikely or less likely to be attacked by government because they're not controlled by a single person. The second key activity that this DAO is going to work on is allocating authority and resources to sub-DAOs. This is important because it's a way that the DAO is going to kind of shift responsibility across different members of the community to allocate resources as best as possible. Third is whitelisting third-party hardware suppliers who build devices. This is extremely important. Some of you may know, I know, that in the Helium project, there were some issues or continue to be some issues with some of the third-party hardware suppliers for that network. So I think it's great that DIMO is getting ahead of this and they're really creating a more decentralized way to vet these hardware suppliers once the public is able to purchase devices for the network. This is something as a new member of the network you should really focus on because you want to make sure that you're purchasing your devices from reputable sellers. So it's a really important thing to do your diligence. But here you're going to have some sort of backstop. It's going to give you some choices to when trying to get involved. And fourth, investing in the DAO treasury. The DAO treasury is really kind of like the money pot of the projects that's going to be distributed out as token rewards or as incentives to build different types of data sets or to hire people to do work. So the DAO is really going to control the money that the project has. And I think that's really important because you don't want one person making investment decisions and kind of causing there to be issues. The more decentralized that is, the more likely that those resources are going to get allocated appropriately. So another really important attribute of the DAO is it's going to control voting structure and governance structure for the network. So over time, there's going to be a lot of things that are going to be voted on with regards to the network and improving it. So here they list the rules or percentages of tokens that are going to account for certain amounts of votes in the voting process. You can see that 1% of token supply to formally raise a proposal, that's where you're going to need for the proposal. 4% of tokens represented in voting to reach a quorum. There's going to be a 7-day voting period and a 4-day time lock after the vote is completed. So that's creating risk when someone votes. So they have to lock up their tokens for a certain amount of time. So that means that the only people that are voting are people that are serious about the specific issue. All right, so let's get to the main point of this video that I know why you guys are watching it, is to understand the token and how you're going to get rewarded for your efforts and your data that you're going to bring to the project. So DIMO is an ERC20 token, which is great because that's going to be compatible with all different types of wallets across the crypto ecosystem. Ethereum wallet, or if you have a MetaMask account or whatever, you're going to be able to control your DIMO tokens in that wallet. So it makes it a lot easier. You're not going to have to have a specific wallet. These tokens are going to be able to used for voting or eventually selling for a profit. I know we probably shouldn't talk about that, but probably why we're all involved. But anyway, this token is going to be very easy to use, which is a good thing. So here's the version 1 rewards proposal. This is the first formula that the DIMO team put together that will help you calculate how many DIMO tokens you may earn when driving. So each week, 1 million DIMO tokens, or 2,000 DIMO tokens per connected car, whichever's less, will be issued to drivers, manufacturers, and telematics device providers. This issuance is going to be based on the percentage of total points that are earned. For example, if Alice earns 500,000 points and the total amount of points are 5 billion across all drivers, she's going to earn 90 tokens, which is 0.01% of the DIMO allocated. Specifically, they've given you this example formula so you can go in and see what type of vehicle you may drive, how many miles you drive per week, and do the calculation. I want to point out some of these categories and give you an idea about why they created them. I think they want to incentivize certain behaviors. So for example, if there's a lot of people that have the exact same car as you on DIMO, you're going to get less points because your car isn't as valuable to the network. If you have a car that you're the only one that drives it, there's no other data, so your data has more value and you're going to get rewarded more. So you can see that if there's less than 100 of your make and model year, you get a 4x multiplier. Similarly, if you have an electric vehicle, you're going to get a 10x multiplier. If you have a hybrid, you're going to get a 5x. If it's a regular, you're going to get a 1x. Some people might think that the electric vehicle is getting more points because it's better for the environment and the whole global warming. That could be part of it, but the real reason is because they're going to track battery data and battery health data, and this type of data is extremely valuable for calculating the estimated value of the vehicle, which is something that insurance providers and lenders, so people who make car loans, need. They need to know how much the vehicle is actually worth, and electric vehicles are so new that that's hard to do at this point, but the battery is such an important part of that data is going to be really valuable. So DIMO wants electric vehicles and electric vehicle battery data, and they're going to give you 10 times more tokens for that. So I think it could be worthwhile for you to estimate some of these inputs and do a base calculation to see how much you could earn. I wouldn't get too discouraged if it's a low number, because the whole point is to get involved and get earning as soon as possible, because as more people join the network, that percentage of total points you'd earn is going to go down. So it's really kind of a race to get in, order your item, and start earning, even if it's only a little bit, because there's nothing you can do. You're going to drive to work, you're going to do what you have to do each day. You might as well earn something for it that hopefully, if this network blows up, which I'm excited about, it's going to pay off in the long run. So finally, I think it's important to go over the token distribution. If you go on Twitter, if you go online and look at crypto, there's a lot of talk about how much the founders get and how much the community gets. DIMO wants to show that their allocation is in line with other projects out there. You can see here that other projects' average team investor percentage is 28, 29%. DIMO's doing 30. It's around there. For me personally, I don't care how much they get, because they're building an opportunity for us, for me, to join a project and earn tokens for my daily activities. They are creating the opportunity for me, so I'm not gonna, they need to earn a significant return. They're putting in a lot of effort and they're building this system to start. So I don't really know why people get so upset about this. I think it's still that kind of populist class battle, but who cares? You're gonna have an opportunity to earn tokens in a network that could have explosive growth in the future. So just take what you can get now. I think this is pretty important though. Here talking about lockups. So here it says capital partners will be subject to a 2-year lockup where after those 2 years, 1/12 of their tokens start unlocking each month for a year. This is probably going to be something to keep an eye on and track just because there's often a significant amount of price movement in the token when there are lockups. So this is something that I'm going to track. I'm going to try to figure out like where the average date is, do an estimate just to be aware because, you just want, if there is a sell off temporarily, profit taking, people call this a dump. But I mean, this is what happens. People need to take profits. If the fundamentals of the project are still good, it doesn't really matter. But if you could be aware of when a unlock might happen, it'll help calm you down if there is a significant sell-off. So I think this is something that's important, and I'm glad that they mention it. It's very transparent, so that, it's all the information is here for you to calculate when a lockup price action might happen. So that's basically it for this video. I hope I gave you some good information on how to calculate the possible rewards you can make from this project and give you an idea of how they're structuring the decentralized organization to distribute those rewards. So please subscribe to this channel because I'm going to continue doing videos on this project. It's very exciting. Please like this video and leave any questions in the comments. I'd be happy to answer. I have a good idea about how this data can be used because I work in the insurance industry. So if you have any questions like that, leave it in the comments. Thank you.